We're taking a quick look at the Forex markets. Take a look at the euro-dollar right now. The levels have been holding for a while. 130.70 is where we're at. Still over the 130 handle. Against the yen, the dollar against the yen, 85.70 is where we're at. So let's bring in Mario Singh, Director of Training and Education at ForexPrimers.com, joining us now on set in Singapore. Mario, the question now seems to be, if you take a look at the levels that the yen is at, then you hear the comments out of South Korea's central bankers. It almost seems like no one believes unilateral intervention by central banks can work.
I agree with that. And the main reason is this, because for a real central bank intervention to work, it's got to be coordinated efforts between the major central banks around the whole world. Now, that's going to be a problem here because where we are in terms of everyone is saying it's going to be a double dip. Now, where Japan is going to be, if they're going to be in a position to be selling yen, they need to have Europe and US on their side, which means to say if US and Europe is going to be selling yen, effectively they've got to be buying back their own currencies. Now, Ben Bernanke and the ECB will not be doing things like this because they need to be supporting a weak currency to boost their economic growth and exports for their countries respectively.
Yeah, an export-led recovery, Mario, that seems to be the strategy across the board in the West. The question then is, if this talk of QE comes true, comes right, how much of an impact can that have on the yen? Because that seems to be driving a lot of what the Forex markets are doing.
Well, let's take a respect what happened when they actually did intervention 6 years back. Now, when they did that in 2004, when they literally flushed the market with trillions of dollars of yens, literally, they intervened when it was about 109, when the dollar yen was about 109. But then, that happened somewhere in March 2004. Within 6 months, although there's so much yen floating around the financial sectors, the yen still could not hold that handle. It still dropped to about 102. So in essence now, when we see that the line in the sand for the Bank of Japan is about 82, and then they flushed the financial sector with the yen is about 85, now it's about 85.78. I still don't see that handle holding on so far. I still see it dropping further because everyone is now in this mode of risk aversion.
You know, but maybe the key, aside from the US pressing the QE button, another interesting angle here is what if the Chinese keep on buying JGBs? That kind of created a little bit, that ruffled a little bit of feathers in Japan recently, given the Sino-Japanese tensions that we have from this captain being detained. But overall, it's more of a broader issue over the ownership of disputed islands.
It is. On the surface, there was a detaining of the Chinese boat captain, but now it's really playing on a political front, it's playing on the Forex front. So the main reason why the Chinese are buying a lot of JGBs is because they're also, in this sense, moving away from diversifying of the US dollar. So that's Hu Jintao's way of actually moving away from Forex reserve of the US dollars.
Right, but the contrarian view also is that maybe, at least short term, what the Japanese are doing is working because the stock markets have rallied. We also see Japanese JGB yields getting depressed. You also see the trickle-down effect at the front end of US Treasuries as well. Can this hold? For how long?
I'm not certain that it's going to hold because at the same time what's happening this week, and we all know that the Forex markets are always pricing in expectations. So especially this week, when we saw coming back off last week, where US consumer confidence has hit a new low in terms of the report came out by the University of Michigan. So this week, everyone is really, the main point to note is that many investors are actually moving out of the US dollars and actually putting money into all the risk currencies, so to speak, where you see the sterling
Aussie dollar is 94. Yeah, is it looking a little bit? Chloe, is it looking a little bit rich for the commodity-centric currency, Aussie dollar?
Well, personally, I feel it's just a little bit too high at this point of time. It is a little bit about, I think, 27% overvalued at this point of time. I might still see that it's going to hit over parity. It's just going to take a bit more time before it hits over parity at this point.
Yeah, we were going to pop that champagne and it didn't happen. Maybe it will happen on set. Thank you so much, Mario. Mario Singh there taking us through the Forex action. He is from Primers.com.